growth path. Now, the resilient recovery development policy operation is the first in the series of 3 operating totaling $900 million and part of a broad World Bank engagement in support of crisis response and resilience in Ghana. And the director of the Institute of Statistical, Social and Economic Research, Professor Peter Quati, has urged government to sharpen its negotiation skills with private creditors to ensure a win-win situation for both parties as it seeks to restructure its debt with them. According to him, although it's not going to be rosy for government in securing a 40% haircut with private creditors, the recent negotiations with bilateral creditors should set the tone for a smooth engagement with the private creditors. It's been reacting to Economist Intelligence Unit's warning to government to go into negotiations with private creditors or Eurobond holders with tact, since the creditors will demand different and complex restructuring terms.
Go to the table, not with the attitude of take or leave, but go with the negotiation skills and make sure there is a win-win situation. Put yourself in their shoes and also get them to also put themselves in the shoes of government to ensure that we arrive at some consensus. At least the bilateral creditors have set the tone, which then tells you what the private creditors will do. But having said that, a 48% shave or haircut might be quite severe, and therefore we need to engage them on what terms that are suitable, and also what government can also accommodate so that we move the process forward. But it's a complex process. It's quite complex. For bilaterals, it's quite not too difficult, but when it comes to private creditors, there are many, they have different goals, they are different objectives, they are investing funds from different sources, and therefore trying to negotiate with them is quite a complex situation. The good thing, however, is that the bilateral creditors have set the tone.
Now, the Ghana Revenue Authority has set 1st January 2024 as the implementation date for the 7th tax amendment signed into law by President Akufo-Addo. Now, the development could result in prices of some products and services go up significantly in the coming days. George Yafe reports.
Among these tax amendments that the Ghana Revenue Authority is implementing is the VAT Amendment Act, which will result in motor insurance premiums going up by more than 30%. This is based on the fact that from January 1, 2024, insurance companies and other service providers should start implementing these taxes. Another development that could also increase the cost of living is the Emissions Act, which will result in vehicle owners paying between 75 Ghana cedis to 300 Ghana cedis every year, depending on the kind of vehicles that they are using. Government is also placing some taxes in form of excise duties on beer and some soft drinks. The Ghana Revenue Authority is also expanding the coverage of excise duty on plastics to imported packaging. The Ghana Revenue Authority was, however, quick to add that it would develop administrative guidelines and practice notice on the implementation of these amendments where necessary in the coming days. It also advised the Controller and Accountant General and employers that payroll deductions for January 2024 should reflect the new rate provided when it comes to the income tax amendment.
Let's explore this further. Let's go on Zoom and engage tax consultant Francis Timoboy for more. Francis, thanks so much for joining me on Business Live, and good to know you are on with us. Now that government has announced the implementation date, what in your view you would say will be the preparation for businesses and individuals? Bearing in mind, the last time we had this conversation, you did mention that it is important for government to embark on a massive education on these taxes.
Amendments that the
If you look at the implementation date, GRA is saying that the implementation date should be 1st January. My brother, nothing could happen on 1st January. 1st January, nobody, no business could go and amend their system to start collecting taxes for the government on 1st. So it's practically impossible. What we see is that GRA will just go after these businesses because they have no choice and just allow them to, pay the taxes. Who is going to implement this tax on 1st January? Sometimes we just have to be clear. Let's be practical. It is not possible. And more so, you've issued a notice on the 17th, and you are saying that the tax takes effect on 1st January. 1st January is holiday. Look at the dates the president has sent it to the law. It was a weekend, 31st December. But the problem is not from GRA. The problem is from Parliament. And we've been calling on them that anytime you are bringing a tax law, fiscal legislation, make sure that you put in place a date for implementation and not just assume. In 2018, when we severed the VAT from the Gov't fund and then Hill, the same problem was created. It took the GRA customs 4 months before they could even amend their own system to collect taxes for government. So if government, with all the resources, is unable to implement it and use 4 months, how do you expect businesses to do? At the end of the day, when the GRA come forward, they will say the law took effect on the 1st, and therefore pay whether you have collected it from the customers or not. So at the end of the day, it's just a problem that we keep creating in the system. But hey, we don't have a choice. We just have to comply and swallow the pill.
It's interesting you've highlighted that point, but how do you foresee things playing out now that it's clear that from 1st January, they are taking off?
Look, businesses are going to be forced to pay. Trust me, the emission, levy, and even the VAT, nobody has started. The insurance businesses, the insurance companies, they've not started charging people. So at the end of the day, when GRA comes, they will tell you to pay. It will be your cost. You have to absorb it. And businesses must be prepared to pay. Otherwise, they're going to surcharge you.
And how do you expect the GRA to work with businesses to avoid this misunderstanding you're trying to highlight?
We can only call for collaboration. Look, we know that it is not their fault. It's not the GRA's fault. The law has been passed by Parliament. And so they have to enforce it. We've seen instances where GRA commissioners have been called to Parliament to answer why Parliament has passed law, and they, in their own will, are not implementing it. So they also don't have a choice. But we always ask them that, look, you need to collaborate with the business community. Whilst you try to implement the law, try as much as possible to be more flexible so that at least you don't kill businesses with that, by force tax implementation. We need to be flexible and more professional in the way we implement some of these difficult taxes.
Again, Francis, ultimately, we are looking forward to, reaching our revenue target. Do you think that with the struggles businesses are going through now, these taxes will yield the right results?
Listen, the taxes, as we are seeing them, they are mostly in the form of indirect taxes, and it is consumers who bear it. So it's you and I. They will pass it on to us. So being indirect tax, I see that the avoidance is quite difficult unless you don't consume. Take, for example, the emission tax. Unless you don't have a car. If you have a car and you are driving, there's nothing you can do. So on that lens, we can say that it's likely that we may achieve the revenue target, especially now that they are trying to implement it from 1st January.
So, Francis, I would like you to hold on for me, as I've been also joined by economist Professor Lord Mensah to share his perspectives on this matter for us. Thanks so much, Professor Mensah, for your time here on Business Live. Your quick thoughts on the implementation date for these new taxes.
Yeah, of course. When you take, the various handles into consideration, you will come to realize that you go back in years for the income tax. There won't be much problem because, of course, once you are being paid, it takes effect from 1st January all the way to the end of January. But then what, we are looking at where the problem may come from, as my good friend on the other side has indicated, will be the exercise taxes, and then the various consumer-related taxes. Those ones, once you consume, that is when it will take effect. But then the implementation has to do with the institutions. And so going back in the days that, that we've spent within the month, obviously businesses will bear the brunt of, paying those, taxes. But then for the income tax, I don't think there'll be much problem implementing it from 1st January.
So please hold on for me, Professor Mensah, and let me conclude with Francis Timoboy. Francis, so in a minute, Do you think this revenue target is achievable?
It could, but I would have, even if parliamentary committee of finance would really listen to their advice, we will ask them to ask the GRA to suspend. Look, one of the tax laws has a problem. There's a mistake in the PUI table, and if you try to add them up, it doesn't tie up. So what we hear is that the GRA says they are coming up with a guideline to correct it. So if the law itself has a problem, what do you do? And payroll, many companies have already run their payroll. So we will ask them to hold it a little bit, give businesses time to at least implement. We can start maybe February. I don't think we will lose much. And if we start February, then we will say that we are giving room for businesses to also, have some breathing space. With that one, I believe that we should be able to achieve our target because most of them are indirect taxes and people cannot avoid it.
Very well. Thank you very much, Francis Timoboy, for your time. He's a tax analyst sharing his perspective with us on that developing story there. All right, so before we touch base with Professor Mensah once again, let's take this story so he reacts to that. And government's quest to sustain inflation rate reduction in the coming months to hit 15% by end of year might be under threat. Now, it follows reports some commercial transport operators are working to increase fares from Monday. George Yafe has the rest of the story.
The Ghana Revenue Authority will in the coming days start enforcing the 5 new tax acts. Key among them is the VAT Amendment Bill, which may result in motor premiums going up by more than 30%. Now, this may force transport operators to also adjust fares, which may end up increasing the cost of foodstuffs that are transported to the market. This could also result in the cost of living going up, which may impact on inflation rate. This because the Ghana Statistical Service recently indicated that if government wants to check inflation rate, it may have to focus on reducing the cost of foodstuffs on the market. December inflation rate currently stands at 23.2%, but there's another development that could impact inflation rate badly going forward. That is the VAT on utility tariffs. Joy Business is also learning that due to these developments and threat to inflation rate rising, the Bank of Ghana could be forced to freeze any significant reduction in the policy rate, a move that might go a long way to increase the cost of credit. Some have argued that if government is really committed to reducing inflation rate in the coming months, then maybe it might have to hold on to some of these taxes taking effect in the coming days.
So let's continue with the discussion. And Professor Mensah, before you touch on the inflation story, we are learning that the World Bank Group has welcomed agreements in principle on the key parameters of the proposed debt restructuring for Ghana reached by the official creditor committees under the G20 Common Framework. Your quick thoughts on that?
Yeah, that's the good news. I mean, if you have debt moratorium of up to, 16 to 17 years, any, official or any agent that is dealing with you as a country will be happy because it gives you that fiscal space, of operating efficiently. And so World Bank will definitely be happy. And now they can be sure that whatever extended, facility they provide to Ghana will be in good use, will not be, something that will be struggling to go and pay off, hidden debt somewhere. So it's a good signal. And I'm happy, they've welcomed the agreement because from the news that we heard from the finance minister today online, there's an indication of a debt moratorium. And of course, once there's a debt moratorium, it frees up, debt service space. And by so doing, if whatever money is extended to Ghana through the World Bank for a certain purpose, definitely that purpose will be achieved. So it is a welcoming, news.
All right, let's now talk about our inflation story, for which reason we called you. Now, over the period, we've seen inflation drop. Now, are you worried about the impact of these taxes on declining inflation rate?
Of course, I think the policymakers are much aware, of the pass-through effect of taxes on prices in this country. And the number, 30% on insurance premium and other handles indicators, I believe that it is an optimum number for which, the impact on it, on prices will be minimal. So we can continue to enjoy this, sustainability in inflation as it is coming down. But I can tell you that if it turns out that they do not do their calculations very well, and those who are supposed to bear the brunt, will be consumers, and in the end, prices will tend to go up again, and so all the gains that we've made as a result of inflation coming down will definitely be neutralized.
Is that to suggest that
it has to do with?
Go ahead.
It has to do with a pass-through effect of inflation onto prices. So the taxes obviously will turn up to have effect on prices, but then we hope that the percentages that has been increased will not have much effect.
And is that to suggest that this could reverse the inflation rate trend we are witnessing?
There's a likelihood. That's why I mentioned the threshold. You see, taxes are being introduced. Some are 15%, some are 10%. It all has to do with our agreement with IMF of reaching, a tax revenue of about 18% to our GDP by the third year of the agreement. And so the increment obviously will have a tendency of having impact on, prices, but depends on the quantum. And so I'm assuming that those who are implementing those policies, talking about the GRA, talking about Ministry of Finance, talking about, the policy makers, the percentages of increase, they've thought through very well. But if you look at the income tax, the increment from 17% to 17.5 and all the various thresholds, I presume that they have done all the various computations to ensure that it will not have much impact on prices. But whatever the case may be, the pass-through effect of taxes is increase in prices, which will build up into inflation.
At the end of the day, government is looking forward to shoring up its revenue targets. Do you share the view that these taxes will rather end up hurting the economy?
Well, it depends on how the taxes are used for. Government intends to shore up its revenue. The question will be, what is the expenditure lines for this revenue? Are they going to go into, development-related, expenditure lines? If those revenue that is generated out of taxes are not being used into, development-oriented, sectors of the economy, or they are spent on projects that are more or less corrupt, related, then obviously you don't expect it to have impact on the economy. But if it turns out that they go into sectors that are key in the development of the economy, then we should see an impact of these, taxes. But history has never supported that anyway.
All right. So, Professor Mensah, can you describe this as an IMF conditionality?
Yes, it is. It is. Because, we proposed to IMF that we want to increase our tax, to revenue, tax to GDP from 15% to 18%. And so this is the process. And if you look at the percentage of increment, we have front-loaded. That means that for the first 3 years, we are going to increase our tax to GDP by 1% each. And 1% is a big margin. And that is why government is being forced to introduce these taxes down the throat of the citizens.
That's fine. Thank you very much, Professor Mensah, for your time here on Business Live. Grateful and always a delight to have you on. Now, in a related development, banks are worried about the impact of these taxes on the operations going forward. John Iwa is Chief Executive of the Ghana Association of Banks.
A broader discussion, the tax situation or tax policy situation in the country. Our view is if people are overtaxed, then their ability to build or accumulate capital is hampered. So we need to balance the act properly. Of course, if the government doesn't also mobilize the tax revenues, how do we also enjoy basic services? So it is the balancing act that we should all be managing, and also to what extent do we efficiently manage the taxes that we have collected. So the focus in my view, should not be on how many more new taxes we should be introducing. We should also be looking at how efficiently have we been deploying our tax revenues. And that should put the case on a scale where people are informed about the benefits of these taxes that, of course, we've all been hearing about the complaints, but the benefits as a result. But of course, as I said, it's a balancing act. We need an environment where capital accumulation is enhanced or is watered, and excessive taxation can, hamper businesses' capacity to accumulate. And of course, you have to balance it with the government's need to also provide social services, infrastructure, compensation, and other expenditure of state.
Therefore, as banks, you're worried.
Not about. Worrying is the economy is in an environment where we are not operating at. Should I say we are not, in the best of places, and I'm sure governments and the managers of the economy are looking at all kinds of ways of mobilizing as much as they can.
You see it as necessary evil?
It is, of course, at some point. Somebody says, how we put it, who has to build the cart? Somebody must pay the bills. The efficiency in the deployment of the tax revenues, and that's where I will put my CD on, that we need to also look very much at the use of the tax revenues, much as the impact on businesses and households can also have some negative effect on the ability to accumulate capital.
The Chartered Financial Analysts CFA Society of Ghana has advised investors to always pay attention to forecasts of macroeconomic indicators to make the right choices when investing. Now, according to the society, certified financial analysts most often have the tools to sometimes predict the behavior of the investment market in the future based on scientific study. Now, this, they say, could save most investors from losing part of their funds, like what was experienced during the domestic debt exchange program. Now, the following report has more.
The domestic debt exchange program undertaken by government saw some investors lose some parts of their investment. The development has triggered the debate among academia and analysts if government bonds are still the safest and risk-free. Speaking to Joy Business at the second annual CFA Forecast Dinner and Charter recognition, the Vice President, Marwan Ansar, said it is time to learn by engaging financial analysts before investing.
Naturally, when you've lost money, it's painful. It's unfortunate people have lost money. But this is a time we can learn. We can go to the basics. First thing, seek the right advice. And don't invest simply because you think the returns are good. Know what you're about with your money and ensure that wherever you are putting your money, you have a clear understanding of what that money will do and whether that money will come back. As a society, we've been advocating that people should be ethical. We've been advocating that people should not just chase returns, but should take a broader perspective to investing and ensure that it is for the future, not just for the now.
On its forecast, the CFA Ghana Society believes artificial intelligence will drive investment direction in 2024. Mr. Ansar is of the strong view that it is time for Ghanaian investors to look beyond the country.
The forecast basically is to guide people on where to place money. And if you had listened to, we said that people should be looking into AI. And we said, don't limit yourself to the Ghanaian market, even though we agree that it's better to invest. If the opportunities don't exist, know that opportunities for investment anywhere in the world exist in our market. It shouldn't be difficult. You remember it was mentioned that the pension fund should look outside, but we have been given some opportunity to look outside. So yes, our prediction is that not much will change for this year, but if you really want opportunity, look outside.
On this part, the head of investment in charge of Africa regions at the Standard Chartered Group, Alex Essiedu, emphasized the importance of upholding ethical values in investment.
I think it's about doing in the dark what you would do in the light. So you know that nobody's looking at you, but you know that you're doing the right thing. And so it's about values, it's about transparency, it's about fairness, it's about putting people first. And although I love Eric a lot, I disagree with automation making sure that ethics ethics comes into practice the way we want it to be.
And that's our part company here on Business Life. I am Pius Kojo Baka.